Good morning and welcome to this Money Control live stream Tuesday morning. You're watching Opening Bell with me, Nandita Khemka. Global cues are fairly mixed this morning. We had a mixed close on Wall Street with Nasdaq outperforming. Lots happening on the AI front and that mega deal. The AI deal, that's something that moved the market yesterday on Wall Street. Asian markets are fairly mixed, but also the fact that the US government shutdown has entered the fourth week, and today happens to be the 34th day. Post tomorrow, that will be the longest US shutdown, government shutdown in the history. So yes, that's one cue to watch out for. There's been a blackout in terms of the US economic data as well, but the US private employment figures will come out tomorrow, so that will be in focus. And in terms of the future rate trajectory, the US Fed chairperson has already hinted that the last rate cut could well be the last rate cut for this year. But let's see how things really pan out, in terms of, how long this shutdown continues, whether there is, more economic data, that the Fed will get to digest before the next Fed meeting. These are some of the factors at play when it comes to the global markets. In terms of the GIFT Nifty, it was hinting at a lower start. Mind you, yesterday as well, we had the GIFT Nifty hinting at a negative start, but we did well to recover from the day's low and end the day in the green. But today it is the weekly FNO expiry day. There is expected to be a fair bit of volatility, because yesterday as well there was a fair bit of volatility, and the India VIX index jumped over 4%. So yes, there is a fair bit of caution, and today of course we will see whether or not the Nifty can defend that 25,700 mark on the downside, but looks like we are in for a softish start for the index. Well, lots to digest. It's a busy day on the earnings calendar. We have banking behemoth SBI reporting numbers today. M&M will also be reporting, Indigo also reporting numbers. So as many as 5 Nifty companies will be reporting numbers. They will be in focus. Your stock related queries, keep them coming in. We'll try and take them up as well. And of course, we'll get you a big market voice on the sectors to focus on when it comes to the mid-cap universe, given the fact that the mid-cap index also hit a fresh 52-week high yesterday. Lots to watch out for in the next 1 hour, so stay on with us. But before we move any further, take a look at the top headlines. Wall Street ends mixed with the Dow Jones shedding over 220 points, while the Nasdaq gaining 110 points, boosted by Amazon and other AI stocks. Asian markets open neck-led rally. The GIFT Nifty is indicating a muted start for the Indian market. US crude oil trades around $61 per barrel mark. Meanwhile, the Brent crude rates are at around that $65 per barrel mark, holding steady even as traders assess OPEC Plus's decision to pause output increases next quarter. Meanwhile, gold also stabilizes as investors shift focus to the US private payrolls data that is due tomorrow. In key earnings, Bharti Airtel reported numbers. It managed to beat expectations in the second quarter. Titan as well reported a strong set of numbers. Meanwhile, a big day on the earnings calendar today as 5 Nifty companies including SBI, M&M and Interglobe Aviation report numbers. For SBI, net interest margin is expected to dip, and M&M is likely to report a mixed quarter. And in the primary market, Groww's 6,632 crore rupee IPO opens for subscription today, while Lenskart's 7,278 crore rupee IPO is set to close with an overall subscription at 2 times. All right, it was a fairly volatile session yesterday. We did manage to end the day in the green. Mid-caps outperformed. Breadth was in favor of advances. As I had mentioned earlier, the mid-cap index managed to hit a fresh 52-week high, highest level since October 1st, 2024. Realty, PSU banks and pharma, these were the top movers yesterday, but FMCG and IT, some of the defensives were out of favor. The Nifty Bank Index picked up good traction. It started the day on a very, very flat note, but as we progressed through the day, we saw the Nifty Bank Index picking up steam, a 325 point up move, and it did end above that crucial 58,100 mark as well. Lots of earnings came out, and of course there were a fair bit of reactions as well. But in terms of the put call ratio, the Nifty PCR climbed to 0.78 vis-a-vis 0.64 in the previous session. In terms of fund flows, FII net sell figures have once again started ballooning. So foreign investors sold shares worth almost 1900 crore rupees in the cash markets, whereas DII buying support remains. So 3500 crore rupees worth of stocks bought in the cash market. But to understand the setup today and what could be the levels to watch out for really on expiry day, let's bring on board Hemen Kapadia, Technical Associate at DRChoksey Finserv. Hemen, talking to you after a long time. Hope you've been well. But looking at the texture of the market, we did snap out of a 2-day losing streak yesterday. Flattish moves. Although it was volatile, we were in a range, so to say. Today being the weekly expiry, and also the fact that India VIX index has been moving on the upside, would you expect a fair bit of caution, and would we expect range bound moves today as well?
A very good morning to Nandita. Thank you for having me on the show. It's always a pleasure. Yes, it's been a long time. Good to be here. Like you mentioned yourself, Nandita, the VIX has gone up. Okay, looking at the chart from the VIX chart from a slightly technical point of view, it's made a rounding bottom. I believe there could be some more upside there. So, they're supposed to move contra. If the VIX goes up, market goes down, and vice versa. So that is one hitch or fly in the ointment that I'd say. Overall, the structure that you're talking about, we've been in a range, like you mentioned, between 25,669 on the downside, Nandita, minus little bit of intraday breach, and on the upside, 26,104. 11 trading sessions have gone by, Nandita, and we've been here. We've made attempts on breaking down from the downside, attempts on the upside, and nothing has worked out yet. Okay, coming back to you, the intraday charts seem to suggest some stability, but 25,650 breaks for half an hour, from a half an hour point of view, Nandita, today could be in weakness. About 25,800, I think the market should start stabilizing. Things should then look better. Frankly speaking, it's been all over the place. We've had a run up, we walked into a resistance. We're taking some time to cool off. From a slightly medium term point of view, that's good. If we cool off, consolidate, and don't go down much, retrace less, then we're setting the stage for an upside about 26,100. So as of now, things are okay. Extreme near term, there's a negative bias, which will have to play out, and I think the VIX needs to give way first, Nandita.
All right, the VIX needs to give way, but near-term setup looks a bit negative. But the Nifty Bank Index, one would take heart from the fact that it did pick up steam, cleared the 58,000 mark as well. Would you say that the setup on the Nifty Bank Index is looking much better vis-a-vis a Nifty, and what are the chances of surpassing that 58,577 level, which happens to be the record levels anytime soon?
Well, coming back to your question, Nifty bank setup, does it look good? Well, yes and no. Yes, because like the Nifty, it has walked into small correction under that. Once again, the decline has been less. So if the stock goes up, it walks into a time correction and not too much in terms of price, that means it's calling up like a spring and setting the stage for the next round of the upside. Having said that, we moved 4,400 points, Nandita, as far as the Nifty bank is concerned. And you take the whole move, it's even more than that. So you can't run 2 marathons in a row. We need to take a breather. That's what's happening. Coming back to your main question, I think 58,600 can be taken out. I'm not sure if that's happening today or tomorrow. The range as far as the Nifty bank is concerned, Nandita, is 57,482 on the downside and 58,577, like you mentioned. So I believe it's a stop in an uptrend. The setup remains positive, but it could, keeping the speed and quantum of the rise, I think it will take some more time, Nandita.
All right, that's the view on the Nifty Bank Index. But what do you do with an SBI ahead of numbers? What's the positioning like? Because the stock has already seen a very, very good run up in the last 1 month, 9% uptick on shares of SBI, very close to 52-week highs as well. Do you think it's vulnerable to some bit of correction in case numbers beat expectations given the positioning?
Absolutely, Nandita, you hit the nail on the head. Looks good. I believe we are heading not 2000, probably 1100 also from a slightly medium to longer term point of view. But like you said, we've had a super move. Well, the stock has moved from 790 to current levels, Nandita, over the last few months. So not surprising if we see profit booking. In fact, Nifty PSU Bank Index has posted a fresh all-time high. Indian Bank has posted a fresh all-time high, and State Bank. So I believe yes, we are susceptible to profit booking, irrespective of the. Okay, that's a dangerous word. Unless it's a big beat on the estimate, I believe profit booking cannot be ruled out.
All right, profit booking cannot be ruled out on PSU banking names. But with that, let's take a look at the market open. First ticks coming in and extremely flat. No big moves, just about 10, 11 odd points down on the Nifty. In fact, it is already attempting to, make a comeback and enter the positive zone. The Sensex as well, just about 2-3 odd points down. The mid cap index, mind you, hit a fresh 52-week high yesterday, clocked in gains of 0.8%. Today as well, at least the start has been in the positive zone. No big moves, but still it is trying to extend those gains that it saw yesterday. Advanced decline ratio as of now is almost 2:1, but we'll have to wait for it to settle down to really call it a trend for the day. The Nifty Bank Index on the back foot, but it is still managing to hold on to that 58,000 mark, 60 points down on the Nifty Bank Index. On that note, let's take a look at some of the sectors that are, taking the lead yesterday. Of course, again, PSU banks, real estate, these were some of the sectors that were at play. Even Pharma made a comeback yesterday, but IT and FMCG were in a spot of bother. Today, real estate index, which of course saw almost a 3% gain yesterday, is extending those gains among the top sectoral movers, but the moves across sectors aren't all that pronounced today. Mild gains, so real estate extending gains, metals as well extending gains from yesterday, pharma barely in the positive zone, but some of the sectors on the back foot are the likes of auto. Auto sales, of course, were extremely upbeat, record sales for the month of October. But some bit of profit taking again. Yesterday, autos ended in the green, but once again succumbing to some bit of profit taking. FMCG, IT extending losses from yesterday. The Nifty Bank, as I already mentioned, under pressure. Nifty PSU Bank Index is also, is witnessing mild profit taking. Want to see which are the stocks, in fact, on the PSU Bank Index, which are witnessing the most, losses. Maharashtra Bank, that's down 0.5%. PNB is down 0.5%. Bank of Baroda, that stock of course hit a 52-week high yesterday and it's down just about 0.2%. SBI ahead of numbers is down 0.2%. But Union Bank and Canara Bank are two counters that are holding out in the green. Indian Bank extremely flat after hitting record high yesterday. Mild losses there. In terms of other movers, then let's see what some of these companies that reported numbers post market hours are doing. Bharti Airtel, good 2.5% gain. Numbers were a beat. Average revenue per user was also higher on a quarter-on-quarter basis. The stock reacting 2.5% higher on that counter. Titan, good set of numbers. That stock is up. Cipla is trading higher. Reliance Industries also providing support to the index. Adani Enterprises, Adani Twins, in fact, trading in the green. From the banking lot, you have Kotak Mahindra Bank that's doing well and ahead of numbers. Some bit of a green tick on shares of M&M as well. What's not doing well? Power Grid numbers came out not all that encouraging, which is why the stock is down 2.5%. Coal India down 2.5%. Tata Consumer as well. The stock is down 2.5% today. Tata Consumer did well yesterday, but some bit of profit taking today. Eternal is back in the red, and some of these auto names, since we saw the auto index in the red, some of these autos stocks also coming under some bit of profit taking. But let's talk about some of these names like Power Grid and Coal India. What would you do with them now post earnings? Hemen, any thoughts on some of these power names?
Okay, Coal India has looked promising on the charts, hasn't delivered, Nandita. And today it's ex-dividend, I think has given a pretty fat dividend. So that's why I think 10 and a half or something. That's why we're seeing this gap down opening today. Having said that, we've been in a range between 350 and 423 for the last 10 months. Nothing changes. So till we don't take out 423, nothing happens. But most of the PSUs, Nandita, if you look at Coal India or PFC, REC, stocks which have moved up 5 and 10 times, 1.5 years and counting, they're still corrective. Maybe they take 6 months more. So the setup remains a correction within a bull market if you have the patience. So I believe it could take some more time, no doubt. There's also talk of Coal India getting into rare earths. Things are not bad, but yes, it has disappointed in the sense it hasn't performed for quite some time now, Nandita.
That's true, but still a correction in a bull market. It's some encouraging, take on the shares of Coal India. But what about Titan? Seems to be doing well. Numbers have been fairly good, and the stock has seen, of course, gains, double-digit gains in the last 1 month. Uh, Gold prices, of course, we know the kind of stupendous runs the gold prices have seen. Any thoughts on where Titan is headed? Which are the next levels to watch out for? Because it is extremely close to that, to its highs as well, right? 3,800. Could 4,000 be in the offing, or would you expect a bout of correction before that really happens?
Oh, we've spent almost um, 20 months, Nandita, in consolidating. So, like we said, 4,000 is there in the offing. But if it closes above 3,900, I don't think it's going to stop at 4,000. We'll be heading towards 4,400. Extreme short term, uh, there are around 10 trading session consolidation phase between 3,665 and 3,800. Needless to say, we need to take out 3,800. The setup, like I said, after 20 months, where it hasn't gone down much, keeping in mind we've had a substantial up move before that. And if it still holds its own and is setting the stage to take out 3,900, I'd say once again, not a short term call. We're heading towards 4,400, maybe even more.
Okay, heading towards 4,400, maybe even more in the medium term. But let's talk about some of the stocks that saw a very great up move, but then succumbed or came under a fair bit of profit taking as well. The likes of M&M. Numbers are expected to come out today, and revenue growth is likely to be in double digits on the back of healthy volumes. But it's the weak average selling price that may hit profits, and analysts are expecting a PAT growth of anywhere between 1 to 4%. Margins, of course, may remain mixed due to its rising share in the EV universe, and of course, commodity cost pressures as well. But tractors are expected to do much better. M&M, if you look at the recent chart, last 5 days or so, it has barely done anything. And in the last 1 month as well, the returns have kind of cooled off. But we all know autos have seen a great run ever since 15th of August. Is this a good buy on dip opportunity for M&M, or would you look at some other stock, four-wheeler stock?
No, I agree with you, Nandita. It's a buy on dip, but I'd wait for the dip. We're in a symmetrical triangle on the weekly chart. I mean, one cannot take a guess how the results would pan out, and more importantly, how the market reacts to the results. Like you said, it's done phenomenally well. If you look at the longer term charts, we remain safely ensconced in an uptrend for the last 5.5 years. It hasn't changed that. We remain in an uptrend. Near term, though, like I said, I would prefer to wait for the results to play out and see how it behaves. We are midweek. I'm looking at the weekly chart. So, frankly speaking, not even midweek. We are on a Tuesday morning. This picture needs to be read on a Friday evening after market. But as of now, it looks a bit overbought, Nandita. There is a slight negative overhang in the sense some of
Okay.
the oscillators have given a crossover sell after reflecting some weakness. So I would be cautious. Let's wait for the result to play out.
Okay, wait for the results to play out. But the stock, according to Hemen, is still in the overbought zone. So, perhaps would make sense to wait for a dip to come by before really getting into this one. But let's shift focus to our viewer queries then. Lots of them. Let's try and address as many as possible. Uh, I really am not getting the name of this person. Hopefully, in fact, if you could just write in your names as well, that will be great. So, this query is on EPL, SL Propack. The person holds it at 219 and wants to know if it's a good idea to average or is it worthwhile to exit. The stock is currently at 204 and the buy price is 219. So, some bit of a loss here, but the stock hasn't really moved, in the last 5 days and 1 month it has been stuck in a downtrend. What are the trends that you are spotting here, and is it advisable to average or should one exit and switch to something else?
Extreme near-term is oversold, Nandita. Downside does appear limited, assuming we don't close below 201. That is the first caveat. But yeah, I believe we should see some sort of a recovery coming in. If we stretch the horizon or the time frame of it, Nandita, like you mentioned, 5 days, 5.5 years, the stock has done nothing. In the sense, markets have gone where to where, and the stock has is woeful, abysmal, clear underperformance. So, as of now, I think it looks like a sell on bounce. Not much to lose from current level. Volumes picking up, oscillators turning positive, positive divergence, crossover buys. It's ticking many of the technical boxes. So a recovery, sell on recovery, because after 5.5 years, if I were to recommend a hold or an average, I mean, we would need levels to be taken out for things to look good. And the nearest thing that can justify that is 254. So I say it's a sell on bounce unless you have a very strong fundamental conviction in the stock.
Okay, sell on bounce, that's the call. Hope that answers your query. There are a couple of queries. We've spoken about Titan, but there's another jewelry stock that was shining bright, sparkling. You can use all those adjectives. Thangamile Jewelers, right? It swung to profit in the second quarter, and of course, the stock hit an upper circuit yesterday. Today as well, I think the stock is up somewhere around 7% or so. A couple of queries on my feed. Naveen wants to know your thoughts on this counter, and Nana Prakasam also wants to know which is a better stock for the next 3 months between a Titan and Thangamile. How would you look at these, the kind of breakout that Thangamile has seen, and should one chase this momentum?
Frankly speaking, Nandita, they are like two different cars. One the Ferrari, one the Lamborghini, I'd say. Titan is in a 25-year up move. So, one, we don't have enough data to compare it to Thangamile. But yes, having said that, Thangamile is 5 years, Nandita. The stock, okay, this is rates I'm giving you are adjusted for the 1-for-1 bonus a few years back. So the stock moves from 100 to 2,900 in 5 years. I mean, that's phenomenal. It's a dream on any parameter that you justify it or count it. All-time highs, no known resistance levels. It's a clear blue sky. But if the stock goes from 1950 to 2,930 in just 10 trading sessions, I would be slightly cautious. There's nothing wrong with it, but I think the laws of gravity could catch up. And there's a little bit of technical justification what I'm saying. Like you said, we've seen a big gap coming in today. Normally, gaps don't remain uncovered. It's not a thumb rule, but let's say, out of 10 times, 7, 8 times, the gaps need to get covered up, especially after such a phenomenal move. So I'd be slightly cautious. Nothing wrong, but I'd say wait, take a breather. And short term, medium term, long term, all time frames, it remains safely ensconced in an uptrend, Nandita.
Okay, some bit of caution is warranted when it comes to Thangamile. Perhaps Titan would be a better bet, given the kind of uptrend that the stock has seen over the last, 20 odd years or so. But, quick couple of more queries then. There's a query from Satvika on Jubilant Ingravia, wants to know How should one approach the stock at the current prices? The stock, on a year-to-date basis and a yearly basis, has seen a downtrend, but it did attempt to snap out of it. If you look at the last month or so, it's up 6%, and it did see its good days as well. 8-9% kind of gains on certain days. But is there a clear reversal? And do you think an uptrend has started when it comes to Jubilant Ingravia, or should one wait it out?
I think we need a little bit of time confirmation to quantify that, Nandita. Short-term things are looking promising, but short-term is too short to, actually take a note of. From a medium-term point of view, things are turning around. The RSI has signaled a buy, stock has taken buy. MACD will give a buy this week. I'm saying that because the daily picture is improving. So the setup is turning from neutral to positive. We need a small close above 707. Actually, close above 720 should trigger off at least 30 beyond that, Nandita.
Okay, that's the view. Hope that answers your query. You may have to wait it out for clear trend to really emerge here. Very quickly, 2-3 more queries. Then there's a query on Markson's Pharma. The person wants to know whether it's a good time to accumulate, given the fact that the stock is near its 52-week low. What would your advice be, Hemen?
Well, yes, but one needs to keep a stop loss of around 161. That is the intermediate swing low that needs to be protected. Otherwise, yes, I think from a short-term point of view and maybe even a medium-term point, I'm saying maybe because once again, week is not yet over. But yeah, small rounding bottom in place, things are turning around, positives coming in. I believe bounce from the oversold territory is already underway, Nandita.
Okay, bounce is already on the way from oversold territory. That I hope that answers your query. Very quickly, 2 queries then. One on Jupiter Wagons and one on BEL. I'm not getting the gentleman's name here. Wants to know your thoughts on Jupiter Wagons. He's been holding with a 10% loss. Wants to know whether he should exit this one and shift to an RVNL. Overall, what are your thoughts on railway stocks? Would you advise a switch to RVNL?
If I look at the setup, technically would also agree with what the viewer has suggested. Jupiter Wagons hasn't done anything much, but then once again, stock goes from some $20 to 750. Yeah, normally, Nandita, if it's a 10-time mover or more, normally count 2.5 years in terms of correction, nothing happens. RVNL is also corrective, but if I look at the longer term charts, I believe RVNL looks better. I don't think the move is, we've seen a very deep correction. 640 to 300 has become half, but I still feel that the longer term setup would justify an up move. So yes, I think shifting from Jupiter to RVNL makes sense.
Okay, shifting to RVNL makes sense. Next query on Bharat Electronics, should it be added at current levels? Numbers have been good. The company is also stuck to its margin guidance of 27% plus. Of course, it's near about its 52-week highs as well. Is it prudent to buy now?
No, I would wait. Like you said, we are closer to its 52-week high, which comes in at 436. But till we don't close above 436, I think that looks a bit dicey. Stock is heavy, it's overbought, and the oscillators are showing the first signs of negative divergence. So I would say long-term charts, everything is hunky-dory. But no, I would wait. I don't think it takes out the all-time high without a correction.
All right, not advisable to buy into a BEL yet. But Hemen, running out of time, so I want to club 2 things. We have a query on Indian Hotels, which reports numbers today. Kanchan Biswas wants to know if it's a good time to enter Indian Hotel for the medium term. And secondly, also leave us with your recommendations for our viewers.
Well, Indian Hotels doesn't look bad, but if the results are there, I really would not give a call because the markets behave quite erratic when results are concerned. So technically setup is not bad, but let's just wait for the results to uh, come through. And two stock picks from my side. Firstly, a buy call on Ambuja Cements. Uh, it's a conditional buy call because it's already moved up and down in the last 10 minutes or so, Nandita. A buy at 575, stop loss of 555, target of 625, risk reward ratio of 1:2. The second one is a buy call on Torrent Pharma. Uh, it's been consolidating. Setup looks quite interesting. We are looking at an intermediate uptrend after this consolidation is over. So one can buy Torrent Pharma at around 36.25, stop loss 35.75, and a target of 3725 Nandita.
All right, those are the recommendations and of course a view on Indian Hotel as well. With that, Hemen would like to thank you for taking out time and joining in this morning. Always a pleasure, and I look forward to more interactions with you in the future as well.
Absolutely, looking forward to it, Nandita. Same here.
Thank you. Well, on that note, take a look at the market. We've kind of slipped further into the red, 60 points down on the index, but 25,700, that level we are managing to clutch on to. The mid cap index, although, is just about eking out slim gains as we speak. But on that note, let me bring on board our next big voice on the show, Vinit Sambre, Head Equities, DSP Mutual Fund, joining in. Vinit, always a pleasure chatting with you. We did, reclaim that 26,000 mark, and, we did start playing catch up with our emerging market peers who we've been underperforming over the last 1 year or so. But now, once again, it seems to be like, things have kind of slowed down a bit on the index level, although the mid cap index hit a fresh 52-week high yesterday. So my point is, so far we've been talking about a bottoms up approach, but looking at the earnings, it hasn't been all that bad vis-a-vis muted expectations. So given the fact that sectorally things are looking much better now, would you advise shifting to a top-down approach rather than talking about a bottoms-up approach? Is that shift or should that shift be looked at right now?
Good morning and thank you for having me on the show today, Nandita. So I believe that as far as the market is concerned, we had anyways front-ended a lot of the returns early on, and we had seen that the overall earnings for the corporate sector in India for the last 1 year has been moderating. And like you mentioned, I think this quarter has been, slightly better than what the expectation was. Expectation was turning much low, and I think the earnings have come out quite well. And that's my base case as well, that I believe that over the course of last 1 year, a lot of the macro has changed for positive. Interest rates have come down by almost like 100 basis points. GST rationalization has happened. IT benefits have been doled out. And then we are looking up to the 8th pay commission, which is also going to come ahead. So I believe that, and there's a low base formation. So I believe that we are seeing kind of a low base as far as the corporate earnings is concerned, and maybe starting the next quarter onwards, we'll see improved growth metrics from the earnings perspective. And the other aspect has been the US tariff challenges. I believe that also we are sort of now hearing that there is going to be some kind of negotiations, and maybe we see a better outcome due to these negotiations. So I believe in terms of the worst kind of a scenario is go behind us, and that could mean that markets could look forward to a better outlook going forward.
So would you expect a retest of all-time highs in the remainder of the year, in the next 1.5 months?
So while it's very difficult to call out the market levels because it has been quite volatile, but that's my sense, given that earnings have really not disappointed. And by that period, if we have some clarity on the US tariffs, it could actually see some kind of sentiments improving and markets looking higher.
Sure. Would you say that globally all the triggers are already in the price? As you mentioned, there has been, there is, the talks are on between India and US to thrash out a deal. But, the US Supreme Court will start hearing the tariff case tomorrow. What if it deems it illegal? How would that situation pan out for the market? Because if that happens, then all the money will have to be returned, right? All the money that has been collected in the form of tariffs. In such a scenario, how do you think things will play out?
Frankly, I have not put my mind to it because these things are very difficult to call out and predict, and things. I mean, with all this legal, it's never certain, and the outcomes are never very clear. But I think on the whole, I would actually more watch out for the negotiations which maybe India is able to carry out with US. That should present as a good sentiment booster, and some of these legal things which are going on in US, maybe we'll see the outcomes and then maybe we'll take a view. But as of now, I don't have a very strong view around those outcomes.
All right, point taken. But let's talk about earnings in details. Mass consumption has been a bit subdued, but select discretionary segments have done well. So within the consumption basket, what are the overweights at DSP right now?
So I think within the clearly I think we are slightly overweight on the discretionary side, and within the discretionary, we have been quite overweight on the auto pack, both the auto OEs and the auto ancillaries as such. So that has been the significant overweight. As far as the other segments are concerned, we have little bit of exposures to, let's say, the retail companies out there, some of the companies related to travel and tourism, and let's say some exposure to the building materials directly, indirectly. But I think in terms of the trends, we are still not able to see very clear trends of growth catching up in other categories other than auto is by now, and maybe the immediate reaction has come in the auto sector as such. But for the others to pick up, that's what my hope is, that maybe we'll see some of the other segments also picking up over the next 1 or 2 quarters, and that's where our conviction on the consumption remains pretty strong.
Travel theme, let's talk about that in granular details. How would you play it? There are hotel stocks, there are OTAs. You look at the numbers TBO Tech has come out with, and Ixigo has also been a case in point. The stock has seen a good up move. Which segment within the travel and tourism universe should one look at? Even airlines for that matter. Indigo reports numbers today, but how should you play this entire theme?
So I think as of now, it has been, our exposure has been through literally a very small ancillary, which is a luggage industry, because we are seeing the trends actually, being quite okay out there. And some of the other segments that you mentioned, frankly, we are watching those segments, but in terms of the valuations, we believe that they are slightly ahead of what we would like to invest into them. And maybe at a point where they come to maybe reasonable valuations, we'll definitely take a look at some of these companies. But in my mind, I believe that travel as a category in India is only going to grow, and that is really coming out from the plans what the airline company has, plans what the hotel companies are seeing, and some of the trends which we also keep watching with the people out here in terms of the spends allocation. The spend allocation towards travel and tourism has really gone up, and I think maybe it's just a beginning of very strong growth over the next maybe decade or so. But definitely we'll keep watching that space. It is interesting, and once we are able to get some of these companies at reasonable valuations, we'll be open to look at those as well.
When you talk about consumption, I can also think about the liquor space, so to say, as a theme. Stocks have done well. Certain beverage firms like Varun Beverages also in talks to foray into hard drinks. Should one tap this theme now, or do you think the regulatory changes that keep happening would continue to be a headwind? How are you looking at this entire space? And in terms of valuations as well, are they looking okay, attractive? What are your thoughts?
No, clearly from the valuation standpoint, they're not very attractive, frankly. And like you mentioned, I think the risk from the regulations is always live, and I know that can actually have bearing on the valuations overall. But I think the long-term growth trends, as far as the beverage sector is concerned, as compared to maybe FMCG, is slightly better. So at certain points, it could be good to explore some of these names. We have exposure in one or two companies out there. They have done well, but as I said, the valuations today don't justify looking at these companies at current juncture.
Valuations have been a hot talking point, in recent times, especially in the wake of all the IPOs that are hitting the street. Of course, a lot has been spoken about Lenskart valuations, right? And today we have Groww as well opening. So all of these issues that are hitting the street are largely consumer tech names, where the business is consumption, but the interface is really tech. How should investors value these companies, and is it worth paying the kind of price they are commanding? What are your thoughts? Any of these IPOs, have they caught your attention? How are you looking at this entire space, which is so hot now?
So clearly, valuation is a factor which is, let's say, dependent upon two things. One is value today, and one is value in future. Now, some of the companies, maybe they have very strong potential in terms of the future growth. The visibility of that growth is high. And businesses which maybe not easily disrupted, I think those will definitely have a lot of value within them, which is a future value. And then there are cases where you have companies which are trading at very reasonable level of valuations, which we call them as value today. So I think investment in any case actually is a value investment, but it depends what an investor is ready to pay for. Is it a value today or value in future? Now, the way to assess some of these consumer tech companies is that how much has the company sort of invested in terms of creating a very strong competitive advantage. They have created let's say very strong entry barriers, and what is the kind of visibility of the growth and longevity of growth. If there are expectations that the growth matrix is going to remain or sustain for long term, and the companies have created very strong model which can't be disrupted easily, I think there's merit in looking at it in a different format, and maybe one will have to pay a higher price for the future value the company will generate. So I think that's what we try to focus on, our framework around the quality of business, the quality of management, the ROCs. I mean, those we are always keeping a very close eye on when we look at these businesses. And that's the format which we have followed. And not to forget, I think the way the trends are changing in India, I think we will all have to align to how maybe the trends are also shaping up. A lot of the consumption is happening through tech. So one will have to think about how, what kind of companies will really gain from that, profits pool will grow over there. And I think the investments will have to get aligned eventually to those kind of investments.
Fair point. Consumer tech is something where India is one area where India is leading. But then AI is one area where we haven't really been able to make a mark in. Of course, very nascent stages, and TCS, etc. They have announced AI investments in the form of data centers. But especially after what's happening in the US, we've had this Amazon OpenAI deal as well last night. How can Indian investors position themselves to ride this wave, given the lack of pure play AI stocks here? Is it a good time to, perhaps look at these global AI stocks and have them as a part of your portfolio?
So I think from the India investment perspective, you're right. There are no direct AI plays, fortunately. But I think so. The indirect way to play is through some of our tech companies, and I believe that eventually, when the geopolitical challenges are behind us, these companies will see overall spends taking place in the international market, and those spends could also be linked to the AI related segments. So I believe indirect way to sort of play AI eventually would turn out to be through some of these IT software companies in India who are going to be majorly sort of providing those services to the international companies. But I think that maybe still some time away till the time we see some of these geopolitical challenges behind us. And I think AI in itself, I think it's it's a debate which is going around whether there are very relevant people who are calling it out as a bubble. But I mean, everything is cyclical in my mind. There are periods in the history we have seen 2000.com boom and bust. I think these are the ways in which cycle actually progresses, and at some point it will reach a very high point, and then maybe there could be some slowdown or moderation or deep cuts. We don't know. So I think it's a very difficult call to make whether it is right point right now to look at some of these AI companies or no.
All right, got your point. Since you're talking about innovation and leaders in that space, if one were to add more innovation stocks to their portfolio, we spoke about consumer tech, we spoke about AI. Any other such segments where one can look at?
No, so I think as far as India is concerned, we all know that our strength lies basically in actually not innovation, but actually services. And maybe a simple case like an specialty chemicals. What they are trying to do is that they're trying to make products for the international MNC companies. And I believe that eventually China is a large player in the category, and people are going to look for an opportunity outside of China. And I think India will become a large player there. I'm not talking about maybe next quarter or so, but I'm just saying these are trends which are going to shape up over the course of the next 4 or 5 years. And the companies which get aligned out there will sort of see big gains. So I think not innovation, but I think reverse engineering is what I believe some of the companies which are doing well and are able to get hold of these businesses should see themselves doing well over a period of time. So even a simple, as I mentioned, all these specialty chemicals, pharmaceutical, these are the plays which one can look at from that quasi innovation standpoint, more from the reverse engineering standpoint.
Sure. And within pharmaceuticals, would CDMO be something to bet on right now?
Yes, I mean, we have a decent exposure out there in the CDMO pack. And like I said, I think this is something which the Indian companies have really seen themselves doing well and should continue to do well. So I believe that CDMO or even the generic supply to the US market, all those kind of companies will eventually do well is my sense.
Sure. Last question really, if there were to be a pickup in the market, large caps have been doing well, but mid cap index as well managed to hit a fresh 52-week high yesterday. But small cap index, it's 5-6% away from its all-time highs, even though the large cap Nifty Sensex, they are just about 1-1.5% away from their all-time highs. Do you think the next leg of the rally, if there were to be one, would be led by large caps or mid caps?
So again, a very difficult question to answer, but let us assume that if we look at the last 1 year, the mid caps and small caps really have underperformed. And when I'm looking at the results which have got announced even for this quarter, mid caps are really standing out in terms of their great outperformance overall. I mean, these are total averages, but in any case, I think the mid caps have done really well. Even the small caps have done really well in terms of the quarterly performance. I believe that if the quarterly performance were to sustain going forward, they will have some catch up out there. But my judgment is that in the long term, I think the mid and small caps play a very important role, because these companies, they do have the potential to outperform or outgrow the large caps, and which is where the key justification for these categories to outperform the large caps over a long period of time. Short term, it's very difficult to call out how things are going to pan out, but that's what I feel.
All right, taking your point. But with that, I would like to thank you, Vinit, for taking out time and joining in this morning. Always a pleasure, and look forward to our next one as well.
Bye.
Thank you. Well, that was a big market voice, Vinit Sambre, with his take on the sectors to watch out for post earnings, his take on IPOs, and of course, mid versus large caps, which one would lead the next leg of rally. But on that note, take a look at the market. We've slipped even further, 62 points down on the Nifty. We are round about that 25,700 mark. Of course, there is a fair bit of caution. It's a weekly F&O expiry. The mid-cap index still managing to clutch on to the positive zone, but I just want to see what the India VIX index is doing. It had surged past that 12.5 mark. Recent times we've seen levels of 10, 10 and a half, 11. So yes, now we are inching towards 13. So that indicates that there is a fair bit of caution in the market today as well. It's up over 1.5%, closing in on that 13 level. So yes, volatility elevated. And of course, fair bit of caution as well came the fact that it is the weekly F&O expiry. But before I let you go, just want to tell our viewers on the IPO front, a Billion Brains Garage or Groww IPO has opened up for subscription. The price band is at 95 to 100 rupees per share. It's a fresh issue of 1060 crore rupees. And an OFS of 55.7 crore shares. The lot size is 150 shares and in multiples of that. So yes, that's one big IPO that has opened up. Of course, we will be getting you the management at 11 a.m. To understand their post IPO roadmap and where will the next phase of growth come in for Groww as well. So don't forget to tune in for that at 11 a.m. That's when you will catch the management on Money Control. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. See you in just a bit.